In the last chapter, we talked about how costs flow through a job cost system. In this chapter, we will be talking about how costs flow through a process costing system. So it's a good idea to take a look at the differences between those cost flows. In a job cost system, materials, labor, and overhead are added to our various jobs separately. This is because firms that choose this method believe that each job is different from all the other jobs in terms of what it needs from the firm. Each job can also be finished separately. One job is not dependent on another job, so they move into finished goods as they are done. And then eventually, jobs are sold and their costs are transferred off the balance sheet and onto the income statement as cost of goods sold. Process costing is a little different because a firm that chooses process costing believes that all of its units flow through the same set of basic processes. That means that when a process firm starts manufacturing, it's going to send materials and labor and overhead into process one, say the mixing department. And then when materials are finished being mixed, they all flow into the second department, say the canning department. In that department, we have all of the units that came from the mixing department, but they're not done. They need more materials and more labor and more overhead in order to finish being canned. When those materials are done being canned, they flow into the next process, maybe the packaging department, where more materials and more labor and more overhead are added until finally everything is done. The completed units go to finished goods, and then eventually they're sold, and their costs move from the balance sheet to the income statement as cost of goods sold. Like that. Firms that use process costing tend to be highly mechanized. Because of that, they tend to think of their costs as being either direct materials, physical things that we add to whatever we're manufacturing, or conversion costs, the cost to convert those materials into something that can move on to the next process or ultimately to finished goods. Conversion costs include direct labor and manufacturing overhead. Combining these costs into a single account simplifies accounting for a process cost firm. Process costing firms go through 5 basic steps in order to answer the question, how much did it cost us to make the units that we produce during this period? Let's take a look at an example that illustrates these 5 steps. Acme Widgets produces its product in 2 departments, mixing and packaging. Now somebody has to tell us a little bit about what goes on in the mixing department. We're told that here all of the materials are added at the beginning of the manufacturing process, and conversion costs are added evenly throughout the rest of the process. That's not the only model for how manufacturing works, and each firm can tailor its model to suit the needs of its own production process. But this is the simplest model, and it's the one that's most commonly used by process firms. So let's see what that means. We start out the period with a work in process beginning balance of 1,000 physical units. Those units, we're told, are 40% complete. 40% complete for what? Must be for conversion costs, because we know that this firm adds all of its materials at the beginning of the process. Therefore, any unit that is started already has all of its direct materials. If it's not finished, it's because it's not finished the conversion process. And we have records of the total cost of the materials and the conversion that were added to this work in process back in February. So this is where we start at the beginning of the period. We're told that during the period we started another 5,000 units, and at the end of the period we have 400 units that we're told are 30% complete. And again, we know that that 30% completion must be only for conversion, because we know that all materials are added at the beginning of the process. In addition, we're also told the dollar value of all of the material costs and all of the conversion costs that are added during the period. Now let's see how we can understand what it cost us to do various things during the period. Step 1 is to measure the physical flow of resources. I like to use this fishbone diagram to try to understand what happened in the mixing department during this period. We were told that we started out with 1,000 physical units in beginning work in process. Then, during the period, we started another 5,000 units. Altogether, that means that during the period, we worked on 6,000 units. Now we need to figure out what happened to those units. There are only two possibilities. Option A, they got finished and were transferred out of the mixing department. Option B, they didn't get finished, and therefore they're still in the mixing department at the end of the period. So we were told that our work in process ending balance at the end of March consisted of 400 units. So the question is, how many units did we finish? Well, we know that we must have worked on 6,000 units. And we know that all costs have to go somewhere. So out of 6,000 units, if 400 didn't get finished, that implies that 5,600 must have gotten finished, and they must have been transferred out. Now we're ready to do step 2, and that is to determine the equivalent units for materials and for conversion costs. Equivalent units are a way of expressing how much effort we put into something. So, for example, for the units that were transferred out, we know they were 5,600 physical units. And we know that they were 100% complete with regard to materials, and they were also 100% complete with regard to conversion costs. The reason we know this is they got finished. They must have gotten everything that they need in order to go to the next department. Now, what about the work in process ending balance? Since materials are added at the beginning of the period, the 400 units that weren't finished must have gotten all of the materials they need, because materials are added first. Therefore, these units are 100% complete with regard to materials. They represent 400 equivalent units. What about conversion costs? We were told that these units were only 30% complete for conversion. 400 units that are 30% complete for conversion is the same in terms of effort as 120 units that are completely complete. Therefore, we can say that we put the same amount of conversion into making 400 units 30% complete as we would put into making 120 units completely complete. Therefore, those units represent 120 equivalent units for conversion. That's the hardest part of step 2. Now all we have to do is add up the total equivalent units for materials and the total equivalent units for conversion, and we notice they are not the same because some units didn't get all of the conversion that they need. Now we're ready to go on to step 3. In this step, someone needs to tell us how much cost was included in our materials and conversion for our beginning work in process, and how much cost we added during the period. This information was given to us. All we have to do is add it up. So we can add up the materials cost from the beginning work in process plus the new materials cost that we added during the period, and that will give us the total materials cost that we worked on. We can play the same game with conversion costs. Conversion costs from the work in process beginning balance plus the new conversion costs that we added equal all of the conversion costs for the period. Then we can add those together. Our total costs for work in process plus our total new costs that were added have to equal our total costs for the period. Or we can look at it the other way and say our total materials cost plus our total conversion cost has to equal our total costs. Either way, our job is going to be to explain what happened to those costs. Where did $207,424 of our firm's resources go during the period? So, the way that we're going to do that is to figure out the weighted average cost per equivalent unit. In the weighted average method, we make no distinction between old costs and new costs. We mix them together, and our only concern is on the output side. Where did this mix of old costs and new costs end up? So what we're going to do is take our total cost for materials that we just figured out on the previous slide, and we're going to divide it by the total number of equivalent units for materials, which we figured out in the step before that. And we get a number, 11.50. That tells us that in a mix between old costs and new costs, each equivalent unit for materials holds about $11.50 of materials cost. We can play the same game for conversion costs. We can take the total conversion cost from step 3. We can divide by the total number of equivalent units from step 2, and that will tell us the cost per equivalent unit for conversion. If we want to know the total cost per completed unit, we can add up the materials cost and the conversion cost, and that tells us that these units on average cost $35.70, and that may be useful for our pricing decisions, our marketing decisions, or decisions about whether we should look around for lower cost suppliers of our various production costs. So we know that 5,600 units were transferred out. Those units were 100% complete for materials, so they represent 5,600 equivalent units for materials times the cost per equivalent unit gives us the total materials cost that is attached to those units. We also know that those units got all of the conversion costs that they needed times the cost per equivalent unit for conversion gives us the dollar value of all of the conversion costs that are associated with those units. If you add up the materials cost and the conversion cost, that gives us the dollar value of the units that were transferred out to the next department. The journal entry to record this transfer would be a credit decrease to the work in process in the mixing department and a debit increase to the work in process in the packaging department. Now, what about the units that didn't get finished? We know that there were 400 physical units, and we know that those units were 100% complete for materials, so they represent 400 equivalent units times the cost per equivalent unit for materials gives the total amount of materials that are in those unfinished units. Now, what about conversion costs? Those units were only 30% complete for conversion. So we already figured out that they represent 120 equivalent units for conversion times the cost per equivalent unit gives the dollar value of all of the conversion costs in those units. Add that up, and that gives us the dollar value of our work in process ending balance in the mixing department, and that amount will show up on the balance sheet. In addition, we can add up all of the costs that were assigned to the units that got done, plus all of the costs for the units that didn't get done, and that must equal the total cost that we had on the input side in step 3, and in fact, it does. In addition, we can add up all of the material costs that were assigned to the units that got done, plus the units that didn't get done, and that must equal the total material costs in step 3. Similarly, we can add up all of the conversion costs that were attached to the units that got finished, and all of the conversion costs for the units that didn't get finished, and that needs to match the total conversion costs in step 3. Finally, we can add up all of the material costs and all of the conversion costs, and that total must also equal our total cost. Let's take a look at the same fishbone diagram from a cost point of view. We started out the period with a balance in work in process for units that were started before March 1st but were not finished yet. During the period, we added material costs and conversion costs. Altogether, that gave us our total costs for the period. Now, where did those costs go? We just figured out how much of it was associated with units that got finished and were transferred out, and the remainder is in the work in process ending balance at the end of the period. Firms use a production cost report to summarize these results and to monitor the efficiency of their production processes. This is an example of production cost report for the problem that we just finished analyzing. It looks very intimidating, but it's really exactly the 5 steps that we went through. Let me show you. Here is step 1, where we're looking at the number of units on the input side and making sure that that equals the number of units on the output side. Here is step 2, where we compute the equivalent units for materials and for conversion. Over here is step 3, where we take a look at the flow of costs on the input side. How much material did we put into our production from old costs and new costs? And how much conversion did we put into production between old costs and new costs? Step 4 uses that information to compute the cost per equivalent unit for materials, for conversion, and if you want, in total. Finally, step 5 answers the question, where did these costs go? We use the number of equivalent units and the cost per equivalent unit to determine the costs assigned to the units that got done and the costs assigned to the units that were left in ending work in process. let's take a look at a practice problem. A firm called Too Cute makes concrete garden gnomes in two processes, a molding process and then a finishing process. This firm uses the weighted average method, and it uses the model in which direct materials are added at the beginning of the process, and then conversion is added evenly throughout. During the month, we are told that the firm began with no units in work in process. That's possible for two reasons. One explanation is that this is the firm's first month of operation. So obviously, since it wasn't in business in August, it started September with no units in work in process. The other possibility is that it's been in operation for a while, but in August, it finished all of the units that it was working on, so on September 1st, there was nothing in process. We're told that during the period, they started 20,000 new units, and at the end of the month, they had 4,000 units that were 25% complete for conversion. So my question to you is, find the number of equivalent units for materials and for conversion during the month of September for Too Cute. Let's take a look at the solution. Before we can answer the question of equivalent units for materials and conversion, we need to determine the flow of physical units. So the first thing we should do is use the fishbone diagram to find out what happened to the units that we worked on. We know we began the period with no units. During the period, we started 20,000 units. Altogether, that means we worked on 20,000 units during the period. What happened to them? We were told that 4,000 units were still in work in process at the end of the period. That implies that 16,000 units must have been finished and transferred out. Now we can take a look at the equivalent units for materials and for conversion. We know that the units that were completed and transferred out must have gotten 100% of their materials. Therefore, 16,000 physical units that got done must represent 16,000 equivalent units for materials. What about the units that didn't get done? There were 4,000 physical units, but we know that this firm adds its materials at the beginning. So even though these units aren't finished for conversion, they are finished for materials. They represent another 4,000 equivalent units for materials. Altogether, that means the firm had 20,000 equivalent units for materials. What about conversion costs? Well, the units that got finished clearly had 100% of their conversion. 16,000 units, 100% complete for conversion, equals 16,000 equivalent units for conversion. What about the units that didn't get finished? They represented 4,000 physical units, but those units were only 25% complete for conversion. Therefore, they represent the same amount of effort as it would take to make 1,000 units completely complete. Add that up and we get 17,000 equivalent units for conversion. Now, we need some more information to go on to the next step. We're told that during the period, the firm added $35,200 of materials and $37,400 of conversion costs. Your job is to find the cost per equivalent unit and then the total cost of the units that were completed and were transferred out, and the cost assigned to the units that were left in ending inventory. Let's determine the cost per equivalent unit first. To do this, for materials, we take the total costs. In this case, the firm had no beginning inventory, so all of their costs are new costs. We divide by the 20,000 equivalent units for materials, and that tells us that it costs $1.76 per equivalent unit for materials. For conversion, we take the total costs for conversion, which was given to us, divide by the total number of equivalent units for conversion, and that tells us the total cost per equivalent unit. Next, we need to determine how much cost was associated with the units that were completed and transferred out during the period. We know that that represented 16,000 equivalent units for material. We can multiply by the cost per equivalent unit for materials, and that gives us the dollar value of the materials that were in the units that got finished. Similarly, we can take the 16,000 equivalent units for conversion, multiply by the cost per equivalent unit for conversion, and that gives us the dollar value for our conversion costs in the units that got finished. Add that up, and it gives us the total dollar value of the units that were finished and transferred out. What about the costs in ending work in process? We know there were 4,000 physical units. They were 100% complete for materials, so they represent 4,000 equivalent units for materials times the cost per equivalent unit for materials gives us the dollar value of the materials in those units. We can also take the number of equivalent units for conversion. Remember, there's 4,000 physical units, but they were only 25% complete for conversion, so that is the equivalent of the amount of effort that would go into making 1,000 units completely complete. Multiply that by the cost per equivalent unit for conversion, add those up, and it gives you the total cost assigned to the units that didn't get finished. Now, let's take a look at those costs on the fishbone diagram and see what the journal entries would be like for Too Cute. We started out the period with no beginning inventory. During the period, we started new units, and we did that by adding materials and adding conversion costs to the molding department. In journal entry terms, that means we would credit our materials inventory and our conversion cost account for the amount that we used. We would debit, increase our work in process in the molding department. Back on our diagram, we can add up all of our old costs, which was 0, plus all of our new costs for material and conversion. Altogether, that gives us our total cost. We already figured out what happened to those costs. We figured out that $63,360 worth was associated with units that were completed and were transferred out. The journal entry to record that would be debit, increase work in process in the next department, the finishing department, and credit, decrease the work in process in this department, the molding department. The rest of our costs represent our work in process ending balance, the dollar value of units that didn't get finished. That is the amount that will show up on the balance sheet at the end of the period. And then that amount will become the new work in process beginning balance for the next period.